substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, the 21st. It's it's Wednesday. I was about to say Thursday. What the heck, Seth? Well, anyways, it's still a quiet news week, but it has been a very active trade week. And we come over to the charts yesterday, of course, after all of the drama. We had a huge move up. I only took it to what? I took it from 42.57, 55, something like that. Look, I got such a great entry. And then I wrote it up to 90, I think. And somewhere in here, 91. I wrote it to 91. Wasn't even half of it. I could have held it all day. But, I got my exit signal, so I knew I was supposed to. But maybe I should have held it. Well, no way that I could have, even my upper target was like 43.20 and they even passed that. And now in the overnight, much, much higher. Treasuries, look at that huge reversal, head and shoulders kind of look here. I don't know if it's actually going to come down all the way like that though, but there is some bearishness coming into the treasuries finally. Oil rebounding a little bit. They didn't have the big up move yesterday like everything else did, but they are kind of recovering here a little bit. Gold and silver continue to struggle, still trading around the 1800 area though. And then copper. Apparently the Chinese government is going to be releasing more of their reserves, so copper remains a little bit depressed. And the dollar, the dollar just looks bullish. Like anytime we get a pullback, they're buying it. So the dollar looks like a good buy there. And so let's see here. Let's come back over here. I don't think we have any news today. Got the Texas speech going. Let's pull up a Discord. Bam-ba-dam-ba-dam. Okay. I hate it when that moves. Okay, so new housing price index for Canada is coming today. And what else do we got here? Oil. We got the oil stocks, and that's it, man. It really is a light news week. But we should still be vigilant because it's Wednesday, and a lot of money gets put into the market on Wednesday. Let's hear Uzi. Financial juice loading for you. It is not for me. It is loading for me. If I launch it. It looks like financial juice is running fine for me. There's a bit of drama going on right now over the U.S. Senate strategy over the budget and infrastructure plan and stuff. But apparently there's still some issues outstanding. They think that the Republicans are close on passing the infrastructure deal, but I don't think that they're going to go for the budget deal. And there's some real question about whether the moderate Democrats will either, because the Dems could pass it on their own, right? Okay. Ooh, the market year has a Delta variant tracker. Oh, I can't see it because it's the market year now. I really like it that the market year, teamed up with Zero Hedge and everything. I'm still not convinced that Zero Hedge provides enough content for their subscription to be worth it. But I don't know if it was a good deal for the marketeer. I think that they could be more successful without them. Could be wrong, but... Easy says there it goes. Okay, cool. Oh, how come your message didn't show up over in here? Test something. Test. What's wrong? There we go. Just a little slow. Okay, so got everything on here. We're good. That's good. We should turn on our robot. Oh, actually, we got to change it here. Is it that one? There we go. Okay, now we're good. All right, so we're on. So while it's just Uzi, we can complain about government policies surrounding the coronavirus. Did you see that in France, apparently, if you are not vaccinated, you're not even allowed to go to the store? That was the headline that I saw. Let's see if I can go find a story about this. You can speak freely, lol. Okay, fact check. France has not banned unvaccinated people. Let's see here. That was misinformation. I'm glad I looked it up. Or when I was looking at it, I was like, I can't believe that would actually be real. Not yet. Proof of vaccination or a COVID negative report has been made mandatory only for entry in big shopping malls and not for neighborhood grocery stores. Oh, okay. So you just can't go to Walmart. Is that it? Eventually, you'll need to scan QR codes on your phones to go places. Well, there are certainly areas of the world that are attempting to do that, but I don't think that will... They kind of already tried to do that in the US, and like a bunch of states banned it and stuff. So, like in Florida, it's like straight up illegal, right? So I don't think that they'll ever get that far. There certainly seems to be a compulsion on the part of people in the government to try and do whatever they can to force people into it. Patience. They won't be able to get. Like, the thing is if like a Supreme Court, if they did that and then that case went to the Supreme Court, I don't think that the Supreme Court would go for it. It is a little startling, though. Don't you think all of this Delta variant stuff, like, I don't see anybody afraid of catching the Delta variant. I see people afraid of what the government will do to try and stop the Delta variant. You know what I mean? That is definitely what I've been seeing. And when I look at what Australia is doing, I am very much like, what the... Do you know? Okay, so like they're going into full lockdowns again in Australia, right? They've had 3 deaths from the Delta variant. Can you believe this? 3 deaths from the Delta variant, and they were all people that were like 70, 80, and 90 years old. And they're locking down the whole country over that? And like, I mean, there's a vaccine. I asked my wife yesterday about business customer flow because our cases are blowing up here in Florida, right? She says she hasn't noticed anything. Flow is picking up. Well, yeah, I do think that there is going to be an impact on consumer behavior. I do think it is going to depress the consumer behavior, but it's not going to be like a recessionary impact. It's just going to be like, you know, growth is going to be 4.5 instead of 5% on the year, like that sort of a thing, you know? But it's just so crazy to me. They locked down the whole country over 3 cases. Like, what? Now you got to think we're inside your house, so if people were fine. Well, you live in Florida, though. I don't think anybody in Florida cares. I think I misjudged Florida. Because, you know, it's always been like a battleground state. But I think what is happening over there, could be wrong, but my theory is that Floridans in general are very much against this stuff and very much lean right on those kinds of issues and also on the woke issues, and that even many of the liberal areas are, you know, very much against that stuff. And they were only kind of neutral because of the whole, like, well, we do need to have good social programs and that sort of thing. You know what I mean? Like, they're much... Vlad says Florida is neutral to mask wearing. So I think what has happened is Florida hasn't really... Like, I started to think, oh, well, is Florida changing? Is Florida trending right? I don't think that that's what it is. I don't think that Florida has changed at all. I think that the left has just moved left, and Florida was like, well, this is stupid. But here's an interesting point. The media is blaming the unvaccinated for the spikes in cases, right? Now, me, I'm not vaccinated, and if I were to get sick, I certainly wouldn't get tested, right? Question mark. No, I don't think it's that simple, actually. So number one, maybe you wouldn't, but I think that most people would still get tested. Like here's the thing, when I caught it, okay, I had like a weekend where I had like a fever and chills, and so I basically sat on the couch in a blanket and watched TV and that was it. That was like the extent of COVID for me. Right? And afterwards, like, was there really any reason for me to be like concerned about it or anything like that? No. But I wanted to know. It was so curious to me. It was like, I have to know for sure. That was COVID. I survived it. It wasn't a big deal. And I think that is the case with a lot of people, is that they just want to they're curious, and they're just going to want to know. Okay. But the other side of it is like contact tracing and stuff like that. Like, if you catch it, you're likely going to find out who you got it from, or the person that you got it from is going to tell you. People are pretty good about that. I'm not saying it's like 100%, but there's a pretty good percentage chance that you're going to find out. So, and then you could even get the contact tracing people call you. Because I know that when I tested positive, and then I got a call from the county. So like the local governments are all following it and stuff. So I don't think that it's that we can really say for sure that you wouldn't get many positive tests because unvaccinated people wouldn't go and get tested. I don't think that that's necessarily the case. You cannot help everyone else if you fill hospitals with corona patients. Well, but that's the thing, is that like people aren't getting hospitalized from it anymore. The only way I'd get tested if I got so sick I had to go to the hospital and they forced a test on me. Yeah, probably for you. Yeah, like this is the thing that I think is so crazy. Okay, so there's this medication. I forget the name of it, but there's some medications that have been approved in other countries, but like over here we're like not even allowed to talk about it. Like I think we're not allowed to talk about it here on YouTube. And I was seeing something yesterday, conspiracy theory. So it's I want to be very clear that it's like a conspiracy theory. Okay, so there's like no evidence backing this up, but I think it makes a lot of sense. They were saying, well, the reason that you can't talk about these potential treatments is because all of the vaccines are on emergency use authorization. And if there is a medication that is an effective treatment for the virus, then they can't justify the emergency use authorization anymore. So they have to come in and say that nothing works. But then here's the thing that I think is so crazy. Like, do you remember this word? Have you heard this one lately? Remdesivir. When was the last time you heard anything about remdesivir? The medication that saved Donald Trump's life? Like, come on. We have effective treatments for coronavirus. That's why people aren't dying. We're not going to come back to a new daily high in the United States of new deaths. Like it flat out, it can't happen unless there is like a significant mutation. I mean, point blank, if people don't think there's a massive financial stake in this COVID stuff, they're dumb. Sure, but yeah, it's just kind of a question of like, okay, but if there's monetary interests, how much influence can they actually have over these sorts of things? It's a little crazy to think about that they could actively have that much power over media and so forth. I think that it's much more likely that media only wants to listen to what the CDC says, and any other kind of doctor or organization that's not like the major US, US, UK, anywhere else, it's like they don't want to listen to them. But there's definitely so the thing is that I don't think that politicians sit down and say, oh, this coronavirus is my opportunity to implement despotism across the United States. I better take advantage of it. I don't think they think that way. I think that a lot of the people that get drawn to government are the types of personalities that are impulsively compelled to try and force things on other people. And so they hear the thing and they turn around and they try and force it on other people. I think that that's what happens. I think that's a much more reasonable theory explanation for why things happen. That doesn't require a huge conspiracy or anything. It's just the way that people behave and tend to behave. So you got to remember that humans have a very strong compulsion to weed out deviant behavior. Okay, like it's really being as somebody with ADHD, it is strong, unconscious, and immediate. You come in, somebody with ADHD comes into a group. The group will almost immediately pick up on that there's something unusual about that person and start to outcast them. People just do this unconsciously. So, when it comes to the coronavirus, if you come in and the cultural expectation that you set is we're all supposed to get a vaccine, we're all supposed to stay home, we're supposed to do everything that we can to make sure that not a single person dies from COVID, and if that's the idea that you have in your head, then you're going to turn around and you're going to implement all of these policies that force things on people that are really quite ridiculous. The question is just kind of like, how far can you take it, right? Because it was really crazy to me. Like the craziest thing I saw through all of this was Australia gets 3 deaths and they implement complete lockdowns again. And then I see the Australians on TikTok and they're not like, this is absolutely dumb that we're shutting down the whole country and the economy over 3 deaths, even though we have treatments for this and everything else like that. No, they were like, this is so ridiculous that the other provinces didn't lock down so that now we have to lock down or whatever the deal is. I'm like, what? Are you crazy? Like, really? Is it you're mad at other people for giving it to you instead of, the unreasonable restrictions?
Order submitted.
Okay, I guess we're gonna go short. Well, Tommy says that's not the problem. The problem is you cannot help others if you feel. Well, that's true. Like I think that at the beginning of the pandemic, when there was concerns about hospitals being completely overwhelmed, and we didn't experience that in the United States thanks to the lockdowns. Yeah, I think that it was justified then. Okay, but the issue is that is not a risk anymore. Like, we're getting a rise in cases, but we're not getting a rise in hospitalizations or deaths. Like, if you do get it and you go to the hospital, you're a lot less likely to die now. But furthermore, the cases that we're getting are mild cases. They're just not, these are like young people that there's like almost no risk on it that are catching it now. And the issue, and the further issue on that is that, like, there's like the herd immunity thing. So like in Utah, I still say we're at herd immunity. The number of people that have caught it and the number of people that are vaccinated, that we're at herd immunity. But a lot of people are catching it that were vaccinated, frankly, right? So what do you do about that? You see, like, there's always going to be mutations and it's always going to be around. So we're not going to live with lockdowns the rest of our lives. I don't think that people will put up with that. Yeah, you learn to live with it because COVID isn't going anywhere. And what does that mean? Well, that means that we have to have effective treatments, which we do. We have to have policies to, be able to handle the capacity when we need, which we already handled. And we need to have effective treatment. I don't know. Did I already say that one? I know, like all of the things to deal with this, it's already there. God forbid we expand healthcare capacity. Well, healthcare capacity in the United States is pretty good, relatively speaking. I mean, I can totally understand from the perspective of the UK government, for instance. Like, can you imagine being at the NHS and looking at this? You're already always trying to fight to justify yourself, and people complaining about things about the NHS that have been run, and capacity isn't very high. And then this comes along, and it threatens your whole system. It's a nationwide, Yeah, Wynn says, I did some research on getting vaccinated and then catching COVID, and the doctors, the scientists say if you're vaccinated and catch COVID, then symptoms are less serious, recovery time lessens. That's true. That's true. And I read a study in particular. They were saying, like, if you caught it, your natural immunity is pretty good. If you have the vaccine, even if you have one shot, your immunity is pretty good. And if you've had 2 shots and you've been sick before, then it's like you almost literally can't catch it, which is pretty cool. But and then if you do catch it, it's going to be mild. Well, that was like the perfect trade that my robot just took there. Can you believe that? Jeez, I'll show you here. I will get rid of my face here so you can see the entry and exit that it took. It was almost perfect. Wow. Isn't that amazing? But I'm merely saying that the chances of you catching it if you've been vaccinated is pretty low. But I don't think we realize that even with it being such a low percentage, when you do it across millions of people, that's still a lot of cases that you're going to catch, right? And so that's where I say that, like, even with everybody being vaccinated, it doesn't just disappear. It doesn't just disappear. And so if we're going to freak out every time that you see a rise in cases from a new variant, then like we have a real problem, because that's not going to go away. And the whole point here was for us to delay of the huge spike in cases so that we could get people vaccinated, so that we could get some treatments. We did that. Mission accomplished, guys. Like seriously, the beginning of this year, mission accomplished. We did the thing, and yeah, doesn't mean that everything's going to be perfect, but it's supposed to mean that you don't need to completely destroy your economy anymore. You know? The other thing to consider is that someone who gets vaccinated is more likely to wash their hands, wash their mask, wear their mask in public, and be a little bit more cautious about crowds. They're paying attention. I don't know about that. I mean, I know that makes sense when I don't have any kind of studies to say that does or doesn't happen. But I've seen some things that kind of make so for example, the people that I caught COVID from were some of the most conscious people on that sort of thing that you could possibly imagine, right? I think it could be one of those cases that the person that is really cautious about it actually overestimates how safe they're being. Like they think they're being hyper safe, but then everybody will break down and make little mistakes here and there, and they don't realize how much they are because they've ingrained it into their identity. It's like the Dunning-Kruger syndrome kind of sort of a thing. You know what I mean? I'm not saying that they're dumb or that dumb people are more likely to know, but what I'm saying is that when you practice something, you're more aware of it, and when it's a problem, you're more aware of it, right? So if you think that you're not very smart, then you try very hard to learn and overcome that you're not very smart. And that in the end actually makes you smarter than the people that from the very beginning always thought that they were smart, right? And I think it could be the same with the viruses. The people that aren't super triggered by this may actually end up being safer than the people that are like super concerned about it in behavior wise. Because think about, so good example, these Texas Democrats, they left the state to try and prevent a bill from being passed on election security. And they all did it together on a bus without masks. And somebody on the bus had COVID, and it's become a super spreader event. So much so that they've stopped saying how many people have caught it because it's a huge embarrassment, right? So you would think that these would be the people that would be the most cautious about it, right? But it turns out that they weren't. And we continue to see instances where it was like people in key government positions and people that were pushing mask mandates and travel restrictions and things like that break them, right? So It's always hand washing. My idea is to avoid COVID because I don't want to spend any time in the hospital. Well, you're old enough that if you caught a case, it might be like a really bad cold, but it's still really unlikely to kill you. Just to say, I'm not saying go out and catch it, but I am saying pretty good chance that you might catch it at some point, and that if you do, you shouldn't be afraid. It's when you're like 80 that it's a problem. And I know that Win is getting up there in years, but she's not 80. I'm still super hype about that trade. How come? Well, wait, hold on. Why is it not showing me? Oh, that's really weird. The strategy itself. Can I show this? Oh, hold on. Let me make this right here. The strategy itself doesn't show any realized or unrealized profit, but the account shows it. What's with that? Weird. What contract size are you using? The robot is trading one ES contract. So it made $200 on that. It's a little unfortunate that we kind of screwed. So what happened was, for those of you that weren't here yesterday, I started to get concerned about the number of trades that my robot was taking. And so I said, well, there should be some opportunity here. I can take trades discretionarily. And I'm still going to say that I want to take trades discretionarily. I don't think that what happened yesterday was because of me being like some sort of mental mistakes, anxiety sort of a thing. You know what I mean? Because I went and I took one on my live account. It was actually, thinking back on it, that me taking that trade on the live account was kind of weird because I haven't traded on that live account for months. And I wasn't nervous about it, or I really didn't think about it at all. I just took the trade. I had the set stop and it worked out. I digress. So the robot took a trade yesterday. It failed. So then I took a trade yesterday. It was a really great trade, and it didn't work out. By the way, if that trade had worked out, if I had just waited and taken it later, when we were already on the upside and I had held it, that trade would have been more than the combine on its own. It could have been a $2,000 winner, which would beat the combine with one, right? That's the crazy thing. Of course, you have this consistency rule, so it wouldn't count, but like it's crazy, right? But it was a loser, so I had two losers. That's minus 400. My limit for the day is 550, so I decided to turn it off, right? Well, I didn't cancel all of my orders. I thought that I was safe, but I forgot that I had placed those orders manually, and so they didn't just come off when I got stopped out. So when it moved up, it tried to go short and took another loss, and that was the comment. So they're giving me free resets, so I reset it. And it come back, and it took a $200 winner today. Logan, I make 4,100. That would be my profit target. Oh, you made 700 last session? Oh, okay. Yeah, if you had held. Yeah, but depending on the combine, I would say my recommendation well, I don't want to say my recommendation, but what I've been doing, like if I had taken that and it had worked out, I would end it at the max profit. So like here, I can show you because I'm doing an earn to trade one, right? It doesn't show me yet because I haven't. Wait, once it's been a few days, it will start telling you. It will say like the maintained consistency is that your largest winner can't be more than 30% of the portfolio, and so it will tell you like what is the max, what is 30% of your portfolio, and so if you catch a winner, like that's where you should cut it off at. Yeah. So that's what I've been doing. Well, I only take, the robot just takes the $200 trade, but that one that I was doing, I was swinging for it. That's what I was planning on stopping at 500. Well, the reason I'm doing it is because they want to do a sponsored video. So that's why we're doing the combine. So here's the thing. I ran the robot sim last month and it worked pretty well. It will tend to take like one trade around this time and it tends to be a winner. And then usually it doesn't take any other trades the rest of the session, actually. But it's an automated strategy that I developed in NinjaTrader 8. What was I going to say? I was going to say something else about it. I can't even remember. Oh, yeah. So last month it would have passed. It would have passed last month. And we were doing pretty good. Like we had gotten up to 900, I think, before we broke the rule, which was really unfortunate. But of course, that's only like 3 trades, right? This is really leveraged. If it passes the combine, I'm not sure that I really want to be funded, to be honest with you. Not that it wouldn't make money and wouldn't be great, but I don't want to pay the professional fee. And the issue is that I'm not confident. So assuming that we don't get another freak out move, and I have to say that move that my robot took that it made money on, it has me a little concerned. Today we could see money be put to work, and I have to remind you that yesterday, according to the Goldman Sachs desk, their clients were not buying the dip yesterday. They did not have a lot of activity on their desk yesterday, suggesting that the bulk of the activity on the rebound yesterday was retail trading. So Wednesday is a day when a lot of money tends to be put to work. We still don't have a clear answer as to where the bearishness comes from, if it really is concerns about the Delta variant and a more generational slowdown in economic activity and stuff like that. All of these different factors, it could all just be explained from market technicals and positioning. But today, Wednesday, could give us a really strong clue about that, right? And if it's down, then I'm back into, well, I don't know about this, because the algorithm is not going to perform as well in really turbulent markets. It's just not going to take trades, actually. And then I might have to take discretionary trades. But if it turns out well, then I think we'd be on a good track. But I long term, though, it's like the chances that the algorithm eventually blows out, given their risk parameters, I'd say it's probably going to happen at some point. I say pass on E-mini, then trade micros in line. Well, one of the things that I was doing was when I was concerned about, like, I was like, oh, well, it's going to take the correct number of trades, or I'll be able to take a trade every day. And let me back up. At first it was like, I don't know if it's going to take enough trades, and I don't know if I'm going to reach the target in the amount of time. But then I stopped being as concerned about hitting the target and more about just trading every day. So it was like, okay, I'll just take a micro contract, and it doesn't matter if it's a winner or loser, because it will just be, it's minuscule compared to what the algorithm will do. Ace got a long signal. There you are. By the way, Ace, you left so early, but I changed the Discord so that you should be able to get in without a phone number. So after you're done, log back into Discord and see if it will let you join the server. And then I think that on Friday, because let's go double check. I don't think that there's much going on Friday. I'm being a little ADHD right now. I feel like I'm jumping around a bit. It's probably I am, because I just have a lot of feelings about all that's been going on. It was after the stream, I was like exhausted. Okay, yeah. Okay, so there's flash manufacturing PMI, so maybe not this Friday. I was gonna say get it ready so that on the Friday we can do the what do they call it? The Discord stage or whatever it is. And that'd be fun. And then we can have Ace come in and talk, but we can have anybody that wants to come and talk with him too. Although I have to say, Ace, you should get a better microphone. I was thinking about that also when I heard you yesterday. I was like, oh, I wouldn't mind having Ace in here to talk to me every day, but he's going to need to have a better microphone if he does that. Does not sound like fun. So if you get a new microphone, you should get this. You should get this here, right here. The Wave 3. Ooh, you can get the Pro Audio bundle with the pop filter. No, just get this one. It's $129. Didn't work. It's kind of interesting because before you came in, I don't know when you popped in here, but my robot took a trade short. Here, let me show you on the screen again. I kind of hide this because I don't necessarily want people to know when I'm entering into and out of trades on the Combine. I've kind of been keeping quiet about it, but like yesterday was just so hilarious that I just couldn't keep it in, right? But it took the trade, right? It went short, almost immediately went down after that. Because when it took it, I was like, okay. But it's retraced back up since then, so... you know what else? We haven't really been paying attention very well, but the treasuries are just getting crushed. Oh yeah, the treasuries are getting crushed. So yeah, nice job, robot. So you see, I'm getting kind of conflicting signals, right? The robot was saying short, but maybe that's just a short-term signal. The treasuries are saying go long the E-mini. The treasuries are saying everything is hunky-dory. I suppose that situation could change really quickly, but... Gus says, good morning. Good morning, Gus. Welcome back. Gus, you've been here like every day for a week or two now. I just want to let you know, even though you don't say a whole lot, that we appreciate you and we're glad you're here. I haven't been, I used to be so good at that sort of stuff, but I think lately I've been way too concerned about myself, don't you think? Good content. Thank you very much. I've been especially on TikTok when I've been posting videos. So there's this one the other day that I thought it was kind of funny. I made a video about the crash on Monday or whatever the deal was. And all I really did was just say, okay, here's what happened. And here are the different markets that moved, and that's all I did was just state what happened, and that's my focus on TikTok, because on TikTok you're not allowed to sell financial services or things like that. So I'm pretty sure that, like, if I made another video about financial juice, for instance, that might not be allowed, right? So but it's still permissible to talk about markets, so I'm just showing people what happened is kind of my focus. And when I do that, all of these people are like, oh yeah, this guy really knows what's going on, and this is such a good analysis that I'm not getting anywhere else. And I'm like, but all I did was show you today's charts. Like, oh, you're watching the floods, the compilation of floods in China right now, so Susie? Yeah, thank you for the link there, Win. You know, that one is kind of weird. So here's the weird thing to me about the China floods. Well, so first of all, I'm not very knowledgeable on what's going on there right now. Okay. But I remember, especially people on the Donald, talking about there was all of these dams and that it was like a real risk, that there was a bunch of dams in China that weren't built very well and could risk failing and things like that. So everybody's talking about it, and then it happens, and it hasn't looked like that big of a story to me. You know, like let's go look, because that to me seems like a big deal, right? So, like, if we go to CNN should be all over that. No. Top story is Ted Cruz blocks diplomats from starting their jobs. There's nothing about it on here. Wait. Flood? Oh, okay. China floods is up there. China floods. Passengers trapped. Okay. It is there. It is on the news, but it's not like their top news story. Which I don't think is like a conspiracy, like, oh, CNN is intentionally not talking about it because they support the communists. What is probably more likely the case is they're finding that people aren't clicking on it. Like, people aren't clicking on it. We'll go to, I'm going to go to the really liberal outlets first. Let's go to Huffington Post. U.S. life expectancy down 1.5 years. Oh no, I might die at 81 instead of 83. Okay. So on Huffington Post, it is like 3/4 of the way down the page. NBC News. Life expectancy has dropped. Flash floods in Colorado. Okay, here we go. Central China deluged as death toll grows. And they don't say anything about the dams failing. Isn't that weird? Okay, what was the... well, so I always like to go to hot air. That's kind of... You notice it's not in their top stories over here. They talked about it. You know, they talked about it. Oh, no, it's not even there. Flood. No, it's not even on hot air. What's that one that Glenn Beck's was involved in? What was that called? I can't remember. Well, we could go to Breitbart. China. Yeah, they're not even really talking about it. See, it's like it's not just the right left thing, right? It's like people don't care. It's like, oh yeah, those Chinese, they're dumb. They build shoddy stuff. Nobody's clicking on it. Okay, dams failing. I just don't. Okay, I'm the only one that thinks that weird. Politics takes priority over human interests. I just don't think that there's a whole lot of interest in that story, though. Why do you think Americans are not interested in that story? Is it just because it's happening in China? I don't know. Like, NASDAQ trader, hi, how are you? Good morning. South American winters are a bit more aggressive this year. It sure is. It sure has been hot this year. It was kind of funny because my parents were talking about it last night. They came over for dinner and they were like, oh, you know, I remember there being really hot years and things like that. And then it goes back to normal and we're fine. Because I'm still at, what if we don't get above average snowfall this year? If we just have average snowfall again, things aren't going to fill up and we're still going to be in a drought next year. And it will be like so much worse because we've used so much of our reserves. There's a news aggregator that rates which biased sites are talking about what stories. Oh, I've seen things like that too. Well, like we can go to Reddit, for instance. Reddit. I have to sort it by hot. Nothing on that page. I'm in Jersey and we're getting the smell of smoke from the west. I don't know. I don't think it has anything to do with political bias. It seems like that the American public is not interested in the story for some reason. That or the Chinese propaganda is so effective. There's all sorts of... I find it so weird. People's attention, you know. Are you doing the combine? I had to restart the combine because I made a mistake. I left an order out there that I shouldn't have, and that blew the combine. So I started it again. I'm doing it for a sponsored video, and the robot is trading it, and it already took one winner. I mean, our media outlets are more focused on fighting a political war, so it makes sense why they wouldn't prioritize natural disasters unless it was dramatically impacting us. Yes, or unless they could somehow make political points from it. I think you're right. It really has turned into, you know, it's not even the news organizations themselves so much as I think it's just like all of the reporters. Like, I think that when we were growing up, like I know that at least for me, that I realized very early on that it's like, wow, everybody is soldiers in this propaganda war between Democrats and Republicans. And it's just like, nobody realizes it yet. Because like this was the realization that I made during the 2008 crisis with John McCain and Obama and everything, because they would put out the most ridiculous things about John McCain. I mean, don't get me wrong. I don't like John McCain, or didn't like. He's gone now. I didn't like John McCain, but it was like he would be out on the campaign trail and he would say something, and then everywhere, like Dig, at the time it was Dig. Okay, Dig would have all of these stories about it, and it would be, they'd be saying something objectively not true. Like, they would be completely misrepresenting what happened. And I would be reading the Politico. There was like Jonathan, I forget his last name, but there was one guy that would follow the Democrat and there was one guy that would follow the Republican, and they would blog like literally everything that happened on the campaign trail. So I'm going in, I'm reading that and seeing their detailed descriptions of what happens, and then I'm turning around and seeing the news story that pops up on the news, and I'm like, this is not accurate at all. And then you'd go and you'd read the comments on Dig, and you would see how people were very intentionally playing the political game, right? And that's when I realized it was like the very early days of social media on the internet, that people were trying to take advantage of social media for their political gain, right? And now what happened was during 2016, it was like everybody became aware, and everybody was starting to fight that fight. And it wasn't very good. Not a very good thing for society for everybody to have gotten involved in that. So it's kind of like I came back and I was like, oh, like everybody's always saying we need more people involved in politics and things like this. So I was like, well, we do want people to be involved. Man, the Treasury just got crushed there. Holy crap. But not everybody needs to be involved. There are some people that just shouldn't be involved in politics, that it's better for their own well-being and for everybody else's that they just don't pay attention to it. And that this whole thing that like most people don't pay attention to politics may be actually a good thing. That was kind of after 2016. That was the realization that I made then. Man, how low do you think that the Treasury could go? So, I suppose I probably should be taking a trade in Treasuries, and I could have been looking there. I just wasn't
Block sell
on my list. I don't want to sell it there after that, but look at the flow here, right? In particular, look at how much trade at 09, half, and 09. So this is very much the typical bearish action in the Treasury. Like when it's moving up, you get so much flow and everything. When it's moving down, it's like orders just pull. It's like you got all of these holders that own the thing, and the market maker knows that they're trying to get rid of it, and so the market maker just pulls their orders, and it's like they can't get good prices. And it's the same thing. Like if I were to have put a limit order at here, like none of them at any of these prices would have gotten filled. They'd still be sitting there. So if we were to take this in the Treasury, we would have to find a spot where we could hit into it. Usually, though, with that kind of action, they might have to rotate around 08 a little bit now. It could do something like it could go for a step lower and then come back to 08. It's very difficult. T-notes and equity reverse correlation is back on the menu, boys. Yeah. It's it's really interesting, the Treasuries on Monday, right? So we've been getting this short squeeze in the Treasuries. The Treasuries were moving higher well before any of this panic in the equities market. And we're still kind of sitting here going, maybe all of the panic on Monday in the equities market was just options gamma, right? But the Treasuries were going up crazy too. And you have to wonder, were they going up crazy too because they knew what was coming in the equities? But now they're plummeting. Are the Treasuries now just like really far away from the fundamentals, and that's what's going on? Was it all just short covering? It's kind of crazy to think about. I don't think I've ever seen a time period in markets where you get such strong extreme moves and we're so unsure if it's even a thing, like normally this move that we had in Treasuries and in the 10-year in particular, man, that is like informed trading. That is like something has changed in the macro picture in July and we should be concerned about it, etc., etc., etc. But this whole time we've been like, oh, well, maybe it's just probably short covering. Okay. Trades EV and gets fills all day. I bet you even, of course. So one of the issues with trying to look at this in the past is that, like, so if let's say that it traded 71 and 11, and then it down ticks at 10, and then it trades like 300 there, and it goes back up, and it sits there for, a minute, and then it comes back down, and then this time it doesn't trade any. So nothing being there doesn't necessarily mean that you couldn't have gotten filled. But when I come over and I look at the volume profile, 509 at 164.10, and there's 462 right there, right? So there was only 62, 462. So there was only 40 contracts possibly that you could have gotten filled on the offer there, right? So if I was in the queue there at 164.10, I wouldn't have gotten filled there either. I tell you what, I've seen some really bender down moves in treasuries before, and I've never been good at trading them. That's why I'm a little bit mad, because this would have been a good opportunity to prove myself on it, because I guess I was kind of expecting them to come down. But I wasn't stocking a trade for whatever reason. But it's so much harder to trade them short than when they're going long. It's just so weird. You never get the fills, and by the time that you're hitting into it, that's exactly when it reverses on you. And the order flow doesn't really give you any hints. It just it drops. Political theater is not worth spending time on, and it is not shit to do with trading. Well, a lot of it does, though. That's the thing. So, for instance, does the $3.5 trillion budget bill that the Democrats want to pass have an impact on markets? You bet your britches it does. And whether or not it's actually going to pass is very important. And so following the politics and knowing enough about the context to be able to realize how possible is it to happen is an important thing. And so unfortunately, that means that you do kind of have to follow all of the nonsense. And if you don't enjoy that sort of a thing, but I think that following the financial news these days is kind of similar. They kind of have similar problems, right? There's all sorts of bias and people shilling things on CNBC. And if you don't get a kick out of watching that, knowing what's going on and kind of deriving some entertainment value from it, I think that it'd be very hard to be in this industry. Right, when I worked at Goldman, there was a television account. There was a television with CNBC on at the end of every row. It will help your account. 100% can help your account. I have some of my best trades that I have made on my live account came from breaking political news stories, especially Donald Trump. I can't tell you how many times Donald Trump said something on the Twitter and the market had a certain reaction to it. And because I knew I was following Donald Trump really, really carefully, and I kind of knew how he worked, and I made money on those. I talk about more than one of them during in my video on trading the news. So I can think of, for example, there was one point where Donald Trump was just so fed up with China, and he said something very aggressive about the trade war on China. And when it first came out, the market was not sure what to do. I don't know why the algorithms didn't just sell it, but I looked at it, I was like, well, that's a sell. That means that the trade war is going to get worse. That's a sell. So I went short. And then, a few seconds later, then the rest of the market figured it out and they started going short, and it was an amazing, amazing trade. And I would have only have been able to have made that trade because of being as knowledgeable in politics as I am. And I'll give you another example, because I don't think that when I talk about these sorts of things, I always say I want to try and focus when I'm teaching. Like, here's the thing. I don't consider myself a guru. I don't want to be called a guru, but I have taken on the role of an educator in the trading space. And so as an educator, I don't want to be making the case, you should follow me because I'm so good at this. And if you do what I do, then you're going to be successful. Number one, I'm not always successful, but number two, I don't think that that's an effective way to determine who to follow and what things to trade and stuff. That's actually like a terrible way to go about it. So if I'm going to say something, I should be able to prove it to you without having to show you from my own performance. So I just gave you an anecdotal experience. Okay, here's something that I think is a little bit more empirical. Okay. Senators, on average, do better than the market from their trading, and the spouses of senators. There is information that they glean, and it's information that frankly is, well, some of this information is available to the public and just nobody reads it. Like, they put these documents up online on the government websites and just nobody cares, because like, who wants to go and read the meeting minutes from the Financial Services Committee, right? But these senators, they are very knowledgeable about what is going on in the industries that they are regulating. And they're very knowledgeable about the possibility of certain legislation passing. And they make money from it. So can politics provide an edge in trading? It can. Paying attention to geopolitical happenings with trading is like seasoning your steak, haha. Yeah, well, I would even say that you can make trading the news and macro and politics like your whole trading strategy. It's just, there's, that goes through active times and inactive times. Right now, I would say that it's much more on the inactive side, right? Hasn't been a whole lot of really interesting news. Even this budget thing, I think it's interesting to talk about, but there's not like a whole lot of developments come with it. I'm not really too sure that it's gonna pass. Okay, Ace is long again. Oh, you're gonna take it that close to the open? Oh, you must already have it. Oh, yeah. Okay. Yeah, 24.25 was way back. So you took it. That was the one that you were talking about earlier. I know. I still want to be short the Treasury, right? Oh, wait, half would have been lovely. It'll be interesting, when the micro yield futures come out in August, if we get Ace to trade them. Because Treasuries will go through these periods where like it just doesn't do anything, So I'll be interested to see how he shakes out, deciding when there's momentum to trade and when there's not. Yep. Oh, there you go. 1 minute open trader. So if you haven't hit the like button yet, please do this for the channel numbers. And one more time for the Elite Indicator Package. Yes. So if you go to speculatorset.com, you can download my NinjaTrader 8 Indicator Package. You get a free 2-week trial. See if you like them. For instance, this dollar index I have up here on the left, which I think is a very, very important to us day trading. That's one of the things that are in there. You can try it for 2 weeks, and then after that, you need to be a $10 subscriber here on YouTube. So you come here on YouTube. By the way, I have somebody that I need to activate after this. Got another subscriber last night. But $10 a month here on YouTube. You click the join button, and then I activate your subscription to NinjaTrader. I should probably talk about that every day. I should probably market that harder because I mean, this is what I use. So I think it's and it's definitely, I'm giving you something. I tell you what, almost any other guru, they would be charging you like $2,000 for it. Any other guru. I'm not a guru. I'm an educator. But anyway, I've seen people offering less stuff for thousands. So $10, I think, a reasonable deal. If you have NinjaTrader 8, I think it's something that you should do. That's the idea. I wanted to make something that I think everybody that owns NinjaTrader 8 will want to have. You want to? So I have I have a video that goes into every indicator in detail, but I have a couple of I don't want to call them basic, but these are things that I think that NinjaTrader should include by default, but don't, and there isn't really anybody else doing them for some reason. So one of them is this synthetic dollar index, right? So it's telling you what the dollar index is without actually having access to the ICE futures to see what the dollar is trading. It's just using the CME FX futures to calculate it. And there's some oddities around how you deal with historical data and everything with it that it does. That's really nice. So yeah, the synthetic dollar index is probably the most, like, honestly, I don't get how people trade without this one. Okay. Just putting that one out there. I also have spread charts so that you can see like what is the spread on the 2s and 10s or whatever. By the way, we're getting a little bit of steepening today. We're getting a really strong bear steepener, which is also really weird in the treasuries. Okay, it's like, how would you know that without being able to see the spreads? Well, I guess you can see it on the DOM, but you can't see it historically. Really important thing. Another thing is these little, you can see them behind your market depth tape, so that alerts you to significant changes in limit orders. So, you know, if you want to see like a huge order showed up at a certain price, you know, and you want to know what happened, you can come back and look at this and you should be able to see it if it was actually one big order. And then I also have my inventory cost basis, which is a model that tries to model the behavior of market makers to determine average positions. And it's pretty good at finding spots where you're going to see stop outs, but they'll have a hard time. You know, like right here in the overnight session, you can see they moved down, they stopped out the longs, but it was very hard to stay below that line. They come back. Or even more recently here, this is the seller's cost basis. The sellers finally got to a spot where they were being profitable. It looks like they took some of their bets off there when that happened, and it bounced. So that's just some of the strategies. I got another one. I'm going to add the pull gap in there. That's these little squares that show you spots where they just skipped. But I have a video that goes into like tons of like more detail than you'd want about how they work, because if I'm going to give you a tool like that, I don't want to just be like, okay, here's the thing and you trade it like this and this. No, I want it to be something you can understand and you can come up with your own strategies from it, right? So it's just information that I'm giving you. If that information is useful to your strategy, and I have to say, like, the dollar index alone is going to be useful to anybody's strategy, right? Then it should be worth it to you. $10 a month. Okay, so the E-mini is starting out really good. I would have felt a little bit more comfortable if they had tried selling first. But what you gonna do? Ace has got the long, is really getting a good long out of it, huh? So this is one of those situations where I feel like you could get a really good runner, but I'm unsure enough of it from the fundamental perspective that I'm not willing to like take big risks like I was yesterday, unless I really see something that really sticks out to me. I guess if I had caught the thing in the treasuries early enough, I could have done that, but you can tell I'm just not as interested in it today when I should be. It's hard to see it move. I'm sure it was just like, well, I mean, yes and no, right? It just goes back to the where the edge is derived from is in the runners. And is catching a runner like that luck? Well, I mean, it depends on what your entry signal was, but that you got 10 points on that one based off of your signal, yeah, it's luck. Where the skill is in managing it, right? You take it and then determining that based on the action that it's done or not is where the skill in that one. But how much of it, how far that particular one ends up going, yeah, that is luck. Yeah, but more to the point, the real question here is, should Seth have taken that trade, right? Should Seth have been going long rather than talking? I think I can make the case in the treasury that I should have, but once it was hitting the lows of the day. So where was that at? Once we were hitting 11, I probably should have been paying attention. But over here in the E-mini, like the move that we got up that we had, I wasn't really getting any like super strong signal other than from Ace, right? So that doesn't tell me anything about that it's going to go strong. And then there's the open. So now that the open has gone through, now I'm more to a point where I might want to think about taking a trade. But did the open work out in a way that gives me a really strong opinion about where we're going to go? I'm going to say no. Like, I think that there's just as likely that we continue to trend up all day as it would be for us to suddenly plunge 10 points and go on the other side of the open. So yeah, when you called your long, you're already green. Well, he did. Let's see here. Where was it? I mean, he did tell us something about going long earlier, but that was like he had taken it long and it didn't work. Right? Where was it? I'm going back. I'm reading the message history here. I swear he said, yeah, I just got a long signal, stopped out. Oh, and then where was it? I guess he didn't state the other one because I wasn't following it. So it was like, well, why should I bother telling him? I knew he was going to go long again, though. Yeah, you're right, though. He in that, usually he's really good at saying it like right when it happens, but that time he didn't give it early enough that anybody else could follow it. But I really got to be, just have to say to you guys, I do not recommend trying to follow somebody else's trades. When Ace comes in and he says, here, I take a trade, he's not saying, I want you guys all to go along with me here or anything like that. It's more of like an accountability sort of a thing and sharing information. So if you follow his trade and it ends up being a complete disaster, you can't sue him or anything like that because it's still your fault. Okay, there's another really mad shift down there in the treasury. See, when I said 8.5 would have been nice. And then after that, should I have just hit into it? We'd be at mercy with lag aces in one place where all on others stream has a 10. Yeah, there's risk in that alone. That's true. Well, especially since, remember, like, it's momentum based. So like if the momentum is shifting or it's in kind of an uncertain area, you'll notice that he'll go long and short and switch multiple times sometimes before he finally catches one. What I don't get is how when he gets the one that's going, how he decides to run it. I've had a real hard time to figure. So I certainly get certain exit points based on order flow that are really good and that you'll get a little bit of a pullback on. But he seems to be able to even hold it through the larger call. Like, well, he didn't do it yesterday, though, did he? Yesterday, he didn't take the whole thing. In fact, I think yesterday he got out before I did. I think another thing that's going on with me is I'm most interested in what my robot does. So my robot took a trade. That's probably going to be the only trade he takes. I'm satisfied with that. It's like, why does it matter if I take one on my sim account? And I don't think that I want to pull my live account out. I'm only going to pull the live account out for E-minis when there's like really something strong happening. I mean, if you move your stops to green and you're happy with what you get in a stop scenario after that, it's just a bet. But he does more than just that. So, well, it hasn't really happened recently, but Uzi, do you remember, especially in Treasuries, those times where it's like we would catch this great winner and it would be like 8-10 ticks in the money and we're like, holy crap, this is great. And then it pulls back a little bit, so we want to hold it, and it pulls all the way back, or it goes negative. And there's been some days even in the E-mini where it does that, where there's like a really, really strong move up and then there's a really, really strong move down. And when you're trying to take something and you're just trying to let it run and run and run, that kind of action really screws you over. And the thing that keeps me interested in how Ace trades is that he doesn't seem to have problems with that action. And he says, I wish when I was starting I had someone who would call a price in a direction every once in a while. Well, I guess another thing that is useful is which direction is he looking to go is a very useful, yes. Like if I'm thinking of going short and he wants to go long, it definitely gives me pause. That makes me go, oh, okay, there must be more momentum in the other way than I realized. Again, if I'm holding a runner at 14 ticks with my stop at, say, +5, if the market keeps running, all the better for me. If it reverses, I may get +5. Also good. Yeah. It's just that, like, if that's the sort of thing that you're doing, if you're trading ZB and you're holding like a 4 to 8 tick stop, then, and you're getting like 8 to 16 ticks on the other side, then just naturally you're going to get a low win rate. You're going to get something in like the 20 to 30% range, right? So being able to catch those runners and keep some of those profits really does matter in the end to the profitability of that system. Especially when treasuries can like completely reverse on you like that. Like they're really trendy, but it's so weird. It's so weird because they're super trendy, and every time I look at it, they're trendy. But then it's like the time that you're trading it, it's not like that, right? So being able to deal with that kind of action, I think, is very valuable. There's definitely some edge in it, probably he might not even completely realize where those edges are. That's what's so interesting about it, is that it's like I'm saying there's something that he does with how he manages the position that might not even be entirely conscious, that if he could systematize, you could make a study about, and it would be like a significant market discovery from what I've seen. Of course, we'd have to test it because maybe we're driven by our own biases and we're not realizing enough the times where it's not working out for him. But he's certainly had periods of profits enough to be worth paying attention to. Especially if you catch 20, 30 points, man, in the ES. You catch a run that's 20, 30 points, you don't have to win very often for that one to work, right? They can reverse the entire market with a single contract. Yeah, well, yeah. This is the thing that's so frustrating about it, right? For us as a retail trader, I can get in and out almost anywhere that I want with a market order, right? It's just you choose not to. It's so weird. It's so weird to me that like you can be making your decisions. You can be using all sorts of crazy analysis, and yet in most instances, what you end up doing ends up being random and you lose money. Like, how is that possible? But that's what happens. That's what the nature of the market is. It's crazy. And and you can't blame the market. Like, it's all your decisions. How can your decisions be so wrong? Well, it's just the stats of it, apparently. It's just the stats of it, apparently. Goldman Sachs oil analysts call Delta a speed bump, quote unquote. It's coming through on Twitter. I'm still really unsure of the Treasury here. Like, I'm sitting here like waiting for like another, then I'm gonna be like, oh, why didn't I take it? Right now, though, it's kind of giving me the I'm gonna screw you over either way right now. I think something that we need to do, or so something I've been thinking about lately in the Treasury. Okay, so like we got this monster move down, right? It doesn't really give you a lot of warning signs, and when you're watching the flow, certain prices will just pull. So it's a little bit more difficult to read the tape when that's happening, right? So what are some other conditions that we can look for that are going to tell us this can do that sort of a thing? You know what I mean? Well, there wasn't the dollar. It started falling well before the dollar started falling. And the E-mini started moving well before the Treasury started moving. It's just, it seems like it's completely independent. I don't know. That's where it's hard, because like I would really like to see Ace just try and trade the 10-year for a month. And if it works out, that would be like significant too. But like, how can you ask him to do that when he can do it in the ES, right? It's the only consistent edge we have. Yeah. Oh no, for sure. I tell you what. So the institution. So if I'm trading at a bank, the advantage that I have trading at the bank is that I don't have to be right. It doesn't matter whether you're right or wrong about, like, they're going long and the market ends up going long. All that matters is how efficiently you execute the trade, the price that you get compared to the market action. And, you know, that's why benchmarks like the VWAP, for instance, are good. It's like, is your buying, is your average position below the VWAP? You did good. That's the game they're playing is completely different, right? But what is the edge that we have? We largely don't have a market impact. We can get in and out wherever we want. And so there are inefficiencies that where the market, this big lumbering market, it takes time for them to move to a certain area. We can take advantage of it. Is just identifying when that's what's happening, right? There's, you know, this whole thing to say, this little green light that says it's doing that right now. That's a hard thing. And that's why I push news so much, because like news that you know is going to move, that's one of those lights. That's something that can make that light turn on. Be like, oh, okay. Though, like, there's a change in the macro, the market has to reprice it. It's going to move like really far, right? But then you get days like today where, like, I mean, there's been crazy stuff going on in the market for sure, but like, has there been any news? No, there isn't, right? The edge they have is capitalization. Well, that's true too. So I just talked about a bank trader, right? Now, if you're a high frequency trading trader, right, then your capitalization and your speed to the markets is kind of your advantage, right? Paper can see our top orders, but can they see why kids love the taste of cinnamon toast scratch? Yeah, not being able to average things out at every price. I mean, I think we've shown that one really well, right? That if you do your market making and you're good at using the order flow and the news to determine the probability of informed trading and canceling your orders when you're getting informed trading against you, that on average it works out that you make about 1 tick per contract. And there are high frequency trading firms that's how they make their money. And those guys back in the 90s, early 2000s that made big money from trading on the DOM, that's how they were doing it. Not really an effective strategy for a retail trader anymore, but that's how they did it. With no stop loss, can you imagine being, well, there's always a stop of some sort. I can tell you, when I worked for Goldman, those traders all had stops. Okay. Their stop was at a price that would, like, you would literally never think of it going there. Okay. The amount of times that they get stopped out on a trade, it was maybe like 10%. Okay. But they did have stops. I believe that the fat-tailed nature of markets necessitates a stop of some sort. Like, the thing is, I could be a retail trader and I can say, I'm not going to have a stop, but guess what? Your broker has a stop. Okay. You lose all the money in the account, the broker's going to take you out. That's how that works. Yeah, if you're averaging, you have more flexibility with stops, one for price entry, one price for stop, one for profit. Not enough flexibility. Well, yeah, and this thing. So another thing that A's does that we can say it provides some edge, right? Remember, there's a difference between edge and predictive signal, right? So one edge is taking on a lot of risk. So if your stop is larger than your target, then the chances of you hitting your target are a lot better, right? That's just the mathematical nature of it in a random market. Your stop's larger, you're going to get a higher win rate. Okay. There's a lot of big problems with doing that. Because of the fat-tailed nature of markets. You hold that one forever, it's gonna destroy you. So what do you do instead? You take advantage of that, but only for very, very short periods of time. Very, very short period of time, and get a little bit of profit underneath of you. And then when you've done that, now it's no longer like that. Now it's like you have this stop that if you break even, it would have to be a pretty good excursion against you, and you can just let it run and run and run, right? So now you're taking you're taking on risk, but you're mitigating it with time. And that's a way. And you could have random entries. You could have completely random entries and make money doing it that way to some extent. If you're averaging, you have more flexibility with stops, one price per entry, one price per stop. Oh, no, I already read that one. I remember being on the Forex forums trying to explain this. I've mentioned it here before describing this. People immediately run to no stop loss martingaling, and it's like, no. We're imagining a scenario where your position size is significantly larger than one. Well, so I have an unpopular suggestion here. Not a suggestion like you should trade this, but like a suggestion for like maybe this is more effective than we think. I think that you can martingale up to a certain point. Like, I think that you can come in and you can say, I'll take a trade. If that trade doesn't work out, the next trade I will take 2 contracts on. And then if that one doesn't work out, I'll take 3 contracts. And then if that one doesn't work, then I'll stop. Now, you would have to have a certain minimum amount of account size for that sort of a thing to work. But it does seem to work. Like, if you're trading discretionarily, the chances of your first trade failing is, that's like just you getting a feel. But for you to like lose 3 times in a row is a lot less likely, right? But you just have to limit the tail, essentially. Because here again, martingaling is also something that works if you had an infinite account size. So I think that you could utilize that to some degree, and you just mitigate it in other ways, right? Just like you're doing the same thing. Instead of having a larger stop than your target, you take sequential profits, so that you're taking on that excess risk only for a short period. And assuming that the signal that you get has enough momentum already that you're really likely to get those close-term targets, then it can work really well. I can play the range in ZB averaging on $1 million sim account like it's nothing. Imagine people with billions of dollars in algorithms coded by geniuses. Yeah, no, totally. Because the market making strategy works, and there's math behind why it works too, right? Like the Kyle model explains to us why that works and why on average you should make the spread, essentially. Like at the end of the day, like if you were to trade that for a year and you were to look at what was the average profit per contract on that sort of a thing, it should come out to the spread per contract. Works with sports betting, I hear. Well, that martingaling unequivocally works if your account size is infinite. But like here again, the problem is that the fat tail on that one. So if we were to look at a histogram of largest streaks, right? The tail on the largest streak is so fat, is so long that it will always be larger than your account. Always. And I'd say it's the same with taking a stop that's bigger than your target. The eventual drawdown that you have on that is probably workable for somebody with millions of dollars, but for retail trading accounts, you'll almost always blow up at some point. So you could potentially take advantage of some of those things and just put limits on them. Right? Like if it's like normal action, I can do that and probably get away with it. And then like, when is the time when you're going to run into that fat tail? Well, it's probably going to be in the market action like on Monday. So if you're trading discretionary, you know, like, I shouldn't be using that strategy during that time, right? Like, I would still argue that as retail traders, that we want to have edge that has a degree of predictiveness in it, right? And I do think that there are ways to get that, especially when you start factoring in correlations in news. Okay. But we should also realize that there are, little hacks that you can use to make money on completely random action merely by taking on risk. And that if we want to day trade futures, that part of it should be being comfortable taking on risks like that and taking advantage of those in addition to all the other edges that we have. Where are we at with all-time high on ES? Okay, so the all-time high, the all-time high is 43.84. The closing high is 43.68. It is possible that we could trade a new closing high today, but it would require a pretty significant continuation of this action, and I'm not so sure that that's what we're getting. So when I look at the chart so far, well, we did have about 10,000 contracts cumulative delta long, and we are getting the shorts are stopped out. Only long market makers are making money. But the trajectory of it wasn't as high. They are potentially turning down. There's a big order at 43.35. It may well be that in 30 minutes from now, we're going to look at this and say, oh, this isn't going to be a trend day. This could actually revert a little bit. So that's still in the cards. I'm not saying that's what's likely. I'm just saying that's still in the cards. So possible that we hit a new all-time high, but I'm kind of leaning towards that it might take a few days. I said way more on that than I probably needed to, huh? If you're still holding it, I would, well, let's see here. If you're looking for levels to pay attention to for I'm long and I'm not sure where I want to get out, I would be looking at 43.50 or so. It's 43.50 and the downside is 4,300 essentially. Oh, what's this? President Biden tweets, "We're seeing devastating impacts of the climate crisis every day, and we need to act. My Build Back Better agenda will help us meet the moment by providing clean energy tax credits, creating a new civilian climate corps, and investing in new technologies to fight climate change." Oh, what would be in a civilian climate corps? Ace doesn't trade from his phone. He just has a crappy computer. Why, Ace, why haven't you upgraded your computer yet? You've been talking about it for months. Why haven't you done it? Let's build you a new computer, get the mic, and You've been shopping around. We could do we could do a cheapest computer challenge, maybe. Like, I bet you that if I went through on KSL and everything, could probably find reasonable machine. Yeah, I think you probably still want to go like a 3500, 3600. Yeah, AMD 3600. I wonder what those are pricing at right now. Let's look at Newegg. $235. Really? I'm shocked, actually. Man. I guess your issue really, Ace, is that computer, just the wrong timing. Computer equipment got a lot more expensive, didn't it? Okay, well, Treasuries came back to 134.08. I miss a lot of activity in the Treasury, but I'd have to say that calling out that 08 as a significant level because of the large orders that happened there was a pretty good call, yeah? And you're sentimental. Oh, you don't want your old computer to feel bad about being replaced? UK OBR's king. For bond investors, UK must remain on the right side of safe haven line, but no one knows where it is. Your kid built... Oh, your kid built... Well, then have him build you a new one. Apparently from spare parts. You give him $1,000 and have him build a new one. Like, I'm all like, oh, I should be interested in trading the ZN now, maybe go short, but I'm kind of looking at, I bet you that it does something else. I think that there's probably another significant move in the ZN, but I'm going to bet you that it's also not going to work out in a way that I can predict. That I can really make, like it's going to be something like it's going to go up to 10 and then fall all the way back down to the lows or something like that. I asked him to take the trash out and I haven't seen him since. Oh, look, I'm invited, guys. I was just checking, I was bored, so I was reading my email. You're invited to Micro Treasury Yield Futures. The CME Group invites you to attend an online event on Tuesday, August 3rd to learn more about the Micro Treasury Yield Futures, a streamlined approach to trading U.S. Treasury benchmark rates, launching August 16th. Guys, it's getting so close. That's like 4 weeks, right? 1, 2, 3, 4. Yeah. Okay, it's not true. Okay. You had me convinced there, Ace. I'm just so gullible. You can't say things like that. Anyways, join us for a conversation with Ted Kari, Senior Director of Rates and OTC Products, David Gibbs, Director of Education, and moderator Craig Baywick, Senior Director of Client Development and Sales. I got to tell you, this guy right here, David Gibbs, is a fucking legend in my mind. Like, so he does all of their education, but when you go down through his pedigree and stuff like that, like, this guy knows how to trade futures. Like, they really did go and find like the best person, the best, most reputable person that they could possibly pick to do their education at the CME. He knows his stuff. And I don't know Ted Carey, but I bet you that it's the same situation. Anyways, as they discuss the contract specs in greater detail, traded in yields to contracts directly reference the most recently auctioned Treasury securities at key tenor points across the curve. Cash settled and available in 4 key tenors. Micro Treasury yield futures offer exposure to on-the-run Treasury yields plus the precision of a smaller contract. I'm pumped, guys. I'm so excited. We're going to trade this. I'm going to lose so much money on these. It's going to be great. Okay. What else we got? Oh, yeah, I was having this discussion with these guys on Futures.io. So they were having a discussion about like how likely a strategy is to fail, sort of a thing. And somebody was, bringing up a really good point that really the thing is you want to have a bunch of strategies that are very uncorrelated to each other to keep consistency. And somebody asked, well, okay, so like if that's true, can it be that some of them are just like moving averages or crossovers or whatever? And I was like, well, probably unlikely that you're going to have something that's just the moving average crossover is part of it, because like there's fundamental flaws with that particular strategy. But I suppose if you're dealing with like rules about how you let it run and things like that, maybe that's, let's go see what they said, because there are some new posts about it. Apparently I've been quoted. Now, this guy says, yeah, that's what I'm finding, and I'm not surprised that basic indicator-based strategies are difficult, if not impossible, to make work. People like you are willing to share little insights here and there, but it seems in general that the people that have found working systems are reluctant to really talk about them for obvious reasons, yes. For example, stochastic momentum indicator is very accurate in showing price direction velocity changes, especially if you look at the second derivative, but it can't magically predict that momentum won't stay flat or zigzag for a while or do a fake and keep going. This is the same issue. This is the same thing that we talk about, right? Is the market going to be mean reverting or trending? And how do you judge that is like the key. It seems to be the key problem. Tommy says, can you see my office? What? I think that was a joke that I might have made more sense at a different time, but now I'm like, what is he talking about? So you can identify potential turning points, but something else that needs to be known to give the new direction or probability. I've looked at going with the direction of a major trend and or other indicators, and you can usually get something to work over a period of time, but it always feels curve fitted and not like a fundamental edge. This comes back to the fundamental question of the market's randomness / efficiency. I think it's clear from evidence that the market is not 100% efficient, but it's not clear to me where the edges are hiding. I do want to respond to that. Oh, so what did Kevin Jog say in here? I find 99 out of 100 strategies I try are garbage. Yeah, probably more like 999 out of 1,000. Yeah. Where was it? Is this one? This is such a good insight here. I'm going to write this here. Yeah, I don't need to do it on this screen. I'm just going to do it over here. I am still kind of tempted to be short like 0.5, but. And the E-mini has just gone dead. Are you still in your trade days? So when you get a flat period like that, you stay in? Yeah, but you're thinking of closing. Okay, cool. That's useful information. Got stuff to not do. They went down, then up, then down, then up. I hate that sort of. I tell you, I mean, I'm way better at it these days, right? But if you go back and you watch the early times of the stream, there'd be these days where the treasury would move up 4 ticks and then down 4 ticks, and I would just get destroyed. These periods where I just take loss after loss after loss after. It's like, what the heck how is that possible to do so poorly? Let's see here. I'm reading here. I think that this is my post. I think identifying that the evidence shows the market tries to be efficient but is not 100% effective at it is a key insight necessary to move towards consistent profitability. More consistent. I don't want to, more consistent profitability. The next step in my mind is trying to identify why those inefficiencies exist. So if the market wants to be efficient, why is it so bad at it? One answer that is worth exploring is that the structure of the market prevents this from happening. When I say structure, I am talking about the rules and mechanics of how the market is set up. For instance, the stock market has an open and close. There's more volume during those times. The nature of the limit order book makes it possible to try and hit a bid or offer just as price is about to leave, so that you can immediately be at break even. These are things that I would call structural inefficiencies. They will always exist, and the question is just if you'll be able to compete to catch them. And then the next part after that is when I already kind of said that. Oops. Aces Trade says, for supposedly going down, this market sure is acting funny. What do you mean by that? Okay. Ace says, I think the ES is headed down. I got out and went short at 37. Oh, that one didn't work out very well, did it? My back hurts all the time. I might quit trading just from that. I've seen some studies that kind of suggest that like sitting and what kind of chair that you have and things like that really aren't all that effective or predictive at telling, addressing back pain, and that things like how much you actually move around are much more useful. So if you're having back pain, then make sure that you're standing up and stretching those legs every 30 minutes or so, and that you're going for walks during the day. Get up, do some push-ups. You know, I learned something really interesting the other day about push-ups. So gymnasts, when they're doing all of these things like handstands and things like that, look at their hands. Actually, let's see if I can prove this to you. Look at how their hands are positioned. Okay, we'll go for the top. We'll go for the top one. Okay, so here she's going for the thing. That wasn't. I didn't get a very good look. Oh. Okay, so look at her hands. They're like this. The hands are rotated in like this. So apparently, when your hands are like this, you don't activate as much of your chest muscles. You're relying more on your triceps. And when they're like this, you're getting more chest. So if you do push-ups and you do them with your hands kind of tilted in like this, then you get more chest activation. And that's how these people are able to do things like push-up, where they literally push themselves up off of the floor. So I tried doing it. It was like, oh wow, this like makes a huge difference. Now it drops. Okay, so we just got the oil inventories. That might be why that happened. And what are we getting? Okay, so the inventories, they were expecting -7 and they got -4, so that was a build on the inventories. And gasoline was about close. Distillate was a draw versus the expectation. Expectation was 3.6 million and the actual was spot 6 million. Okay, remember there's a 20-year bond action at 11 o'clock. That's important. Also, the Treasuries have moved a little bit above 0.8 now, which is also key. So remember, I was saying, I bet you it's going to come to 10 and then it's going to come back down, but I bet you that I'm not going to be able to predict it. Now it's looking like they're just going to go right back up to the open. Because the pec fibers are connected inwards to the sternum. Oh, okay. I think I understand what you mean. Because if there's a muscle fiber that's like this and is connected into here, then that's contraction. But when it's out here, it can't really pull it the same way. Now this guy is saying he's having trouble using the debugger. Edit. I think I got it. Just right click on the chart with the indicator and click reload Ninja script. Ah, yes, that helps. Very good. Very good. Got to feel bad for the guy who got stopped out in the one lot in CF at 72. Oh man. Oh, you're right. Oof. I see that. Oh man. Yeah, that's can we get an F in chat for our fallen brother, man? Well, I don't know, Ace. We did get a little bit of a decline. There you go. That's a little bit better. Like the question, if it comes back to the open, then it's definitely like, I really should have missed it. I really won't. But if it's only like 16 ticks or something, I don't think that we should really be that, FOMO about it, because we're kind of in uncertain action anyways, right? Well, that's some shit that happened. Dude, like here, again, in... So the square root law of order impact actually causes this to happen, right? So you got an order like this. Okay, notice it did this yesterday, right? Initially, your orders have a linear impact, but as the size of the meta order increases, the impact that they have is less and less and less and less and less and less. So if we've already been on a long move, and you're a retail trader and you want to be long and you've just missed this whole thing, and so eventually you buy up into the high of there on this thing, right? You're going to get a lot of volume up there trying to push it and it not actually going. So it is actually quite likely that at some point you're going to be that one little lot that comes in before it comes back, Like you're going to see that enough times. It's a beginner mistake for sure. You can avoid it for sure, but it's probably going to happen to everybody at some point because of the square root law of market impact. Kind of makes it like a really big, a common mistake if you don't understand that law, right? It's just so weird that like most retail traders don't know what the square root law of meta order impact is. And I suppose that they will probably never care because we're all going to keep it to ourselves, right? Don't tell anyone else. It's a secret. I suppose that they don't talk about it because they don't believe that it's that useful for retail traders. But I find that it explains so much about how the market moves. Mm-hmm. Oh, I got sent the email twice. Oh, I didn't register for the webinar for the See Me. We should do that. Mm-hmm. Okay, so let's put this in. Well, it's going to be at 9 a.m. Central Time, huh? So it'll be at 8 o'clock our time. Actually, that's not bad. Okay. August 3rd. Oh no, I have an eye appointment that day. Oh, it's in the afternoon. Okay, we're safe. We're safe. Okay, so at 8 my time. See me webinar. Is it me or is this ES delta very small? Well, if we look at the peak, so we were at about my indicator or my chart starts at about 14.5 on the open, and we got as high as 26.5. So like 12, 13,000. And we have since come back half of that. So I'm going to say that that's about average for a double distribution kind of a move. Now, I'm surprised the Treasuries came back hard again like that. It was because I said, hey, it looks like maybe they might come all the way back up to the open. I said, oh, well, Seth is convinced that they're long now, so now we can drop it. That's why I didn't take a trade. You know what's something else though is that Wednesday is normally we see a lot of money put into the market. I don't know if that's what we're seeing today, to be honest. Kind of looks like this could be a double distribution day. That kind of still leaves an opening for some of these concerns to come back in later in the week or next week and push markets down again. And, you know, if for instance, tomorrow were to be a bearish day, that would be very disheartening to the bulls, don't you think? So that's a possibility. Although I think I'm still leaning on new all-time highs, honestly. Because that's just what they always do, huh? Look at how fast they come back. That's fun. That's crazy. I just want to take it like right there. I wonder. This rise, yeah. I'd say the rise when the Treasuries kind of rose back up again, it was kind of correlated with the E-mini. So it does look like that the Treasuries may just be responding to the risk appetite out there. But I don't know, we got this 20-year auction again today. I kind of wonder, with the way that they're trading right now, I think we should consider the possibility of another really bad auction, right? I know, we should chat in the Discord today on equities. I keep looking at the comments and I see Gus's last comment and I think it's a new comment. I'm like, oh, I'm going to answer this. But then I was like, oh, I already answered it. 41. Okay, cool. Registration confirmed. Oh, you know what else I should check on? I ordered for something from Elgato and I haven't updated my order. May just be because they're slow, I guess. It says it's still processing. That sucks. Get your stuff together, Corsair. We should also check zero hedge. I really should be checking zero hedge like before the market opens, but I used to always watch their Twitter account and then they blocked me. I'm still mad about that. Rand Paul asks the Department of Justice to investigate Fauci for lying to Congress. Have you heard this argument between Fauci and Rand Paul? It's actually like way more interesting than, it's probably not interesting to most people, but it's more interesting than the headlines actually imply, because the whole thing just turns in like they're implying that it's like a factual argument between Fauci and Rand Paul, but really it comes down to like what is the definition of gain of function research. And Fauci says they weren't authorized to do gain of function research and they weren't doing it. And Rand Paul is saying, well, you're relying on a technicality, like what they're doing is why might as well be considered gain of function research, and we shouldn't be allowing China to do it. We shouldn't be funding China to do it. And so like that's the argument. And so yesterday Fauci was like, well, you just don't know what you're talking about. Which I felt was like kind of like a disingenuous response to it, because it's not that he doesn't know what he's talking about. It's just that he disagrees with that definition of a gain of function research, that it doesn't really accurately prevent the thing that we're concerned about. So now he's asking the Department of Justice to investigate Fauci. I don't think that you can put Fauci in prison for it. I don't think that what he said was perjury. But WTI shrugs off unexpectedly large crude inventory build. Yeah. They did move a little bit higher. It's not very much, though. Behind the market's furious reversal, record high skew. Housing frenzy could be ready to take a breather. That would be nice. Oh, I didn't even notice Bitcoin today. Where are you? Where are you? Back up above 30,000 to 3,200. What I see in Bitcoin still looks really uninspiring to me. I suppose that is a significant increase compared to the previous downturn. That could be a little bit of a turning point, but I'm going to bet you that. Well, I'm going to bet you, but the issue is still going to be like, okay, we move back up to 3,600, and then what? Like you're still in the same range. At the end of June, when the S&P 500 was making new all-time highs day after day, and when the VIX was a fresh 2021 lows, we cautioned that the skew index just hit a new all-time high, meaning that put options have been unusually expensive relative to at-the-money options, helping support the put-heavy VIX index. As we further added, high skew, which compares put option prices with at-the-money option prices, has reached a new all-time high and reflected investor perception that high volatility would return should markets sell off. Commenting on this unusual move, we said that it shows that while on one hand traders seem complacent, they have never been more nervous that even a modest wobble in the market could start a crash. By extension, they have also never been more protected against a full-blown market crash. So fast forward to the violent, if brief, air pocket and hardly a full-blown crash the market experienced late last week and on Monday, which saw stocks tumble the most in months, only to soar right after. In retrospect, traders have the record high skew thanks to thank for that, because while risk reversed sharply on Tuesday and continuing today, traders were fully hedged and ready to pounce. So following up on this observation from a month ago when he first noted the record high skew, Goldman's derivative strategist Rocky Fisherman wrote in this week's volatility pushed equity implied and realized volatility higher, with the VIX briefly hitting 25 on Monday. Even if in absolute terms volatility is not high, 3-week SPX realized volatility is still below year-to-date realized, and Tuesday's rally brought the VIX back under 20. More importantly, in response to record downside skew, correctly implying that a sell-off would bring much higher volatility, skew has now moved even higher, at least for the S&P 500. Some more observations from Fisherman. Although Tuesday's large SPX move and drop in implied volatility has reduced the volatility and risk premium, the VIX remains high relative to recent realized volatility. Furthermore, the SPX has not had 1 month realized vol as high as the current VIX level since November, indicating that options continue to be persistently expensive, which also means that traders are hedging to outside moves both higher and lower, and any sell-offs are likely to be fleeting as the hedges are cashed in. That said, given the recent precedent for quick sell-offs to be followed quickly by low volatility, Goldman expects volatility to subside in the near term, with more likelihood of a sustained increase in Q4. And a big reason for this is the persistently high skew index. SPX skew continues to be at near record levels, which we see as driven by a lack of downside sellers as much as demand for hedging. The strong reaction of the VIX to Monday's sell-off, with the VIX up over 6 points at one point intraday, proved that high skew was justified, at least on a very local level. On a more persistent sell-off, it would be difficult to sustain the level of implied volatility that skew would indicate. Meanwhile, from a cross-asset standpoint, Fishman adds that if interest rates staying this low has the potential to be a catalyst for further equity upside, unless they plunge too fast, leaving the potential for near-term asymmetry in SPX potential returns that is opposite what option markets are implying. So how does one trade this persistently sticky record high skew? Goldman continues to like levered risk reversals as a way to take advantage of this dynamic. Sell a 17 September 3800 strike put to fund two 45.50 strike calls for zero net premium. The trade would be subject to dollar for dollar losses should the SPX close below the downside strike at expiration. Interesting. I wish I thought about how much you'd ask out. Wish we could have tried and twisted his arm into getting into voice chat again, but it's probably too late to do that now. So I only got like 5 minutes left. It sounds like he gave maybe a little bit of it back, but still got like 10 points. It's still a good $500 winner or whatever. And again, should note, Treasuries down at their lows again. That could well foretell further downside to the O2. Oh, Schumer's talking. Oh boy. And saying they're close. That doesn't sound like he's going to say anything new. 08 down to there would have been a good trade, man. I think it's okay that I didn't take one. I still feel okay with not taking one, but that would have been a good trade. Like, I identified the possibility, at least. Knowing when to take the trade and when not to, that's the hard part, man. I can definitely identify spots, but it's like, when is it worth trading? The world may never know. Discovery Trading Group is saying some interesting stuff about the short-term rates, but I'm going to read it. It wouldn't make sense with me reading it out loud. You just go find it on Twitter. Oh, God. I think it's time to quit. What do you think they're going to take the low? Oh, maybe. When it goes, I don't know. I probably didn't reset these all at the same time. But it looks like that the 30-year has already made new low. Yeah. Since we're getting a bear flattener, 30 is the place to trade it, right? But, well, I'm going to be interested to see where it goes to. Do you think in the long term that the treasuries can get back to below 133? Like, they got a ways to drop. Can multiple strategies be placed using buttons on chart NinjaTrader 8 customized? So I'm not 100% sure what you mean. Could you have two strategies going at the same time? Yes. Could you enable or disable or exit a strategy from a button on the chart? Yes. So I think probably what you're trying to do is probably possible. Although what you're trying to do is also most certainly outside of intended uses. And so I would spend a lot of time making sure that that's really what you want to do. Because oftentimes what will happen is we'll get an idea in our head about, I want to trade this way, when somebody has already come up with a better way of doing it, you know? Like for strategies, I think that managing the strategies from the control center works just fine. By the way, I need to disable that strategy. And that's good. No outstanding orders. No. Oh, those are executions. Yeah. Good. I think we're good. Okay, so it was a good day for us, even though I didn't really take any discretionary trades. But you know what? Today, another thing is that in the past, I would have traded a ton today and done terrible. So I'm okay with taking it easy. So tomorrow, Thursday, should be interesting, jobs numbers and everything. In the meantime, stay profitable, friends.